Hey everyone, just want to say thank you so much for checking in to StockGuru today. Just want to go over what it is that StockGuru is really trying to emphasize here. And just want to say thank you once again for checking in to StockGuru. Just wanted to break down StockGuru's main pick for this year, and that's going to be Smile Direct Club. So as we know, Smile Direct Club is going to have their earnings call this Wednesday after market. So just kind of want to do a breakdown so that everybody can kind of understand a little bit more about what this company really does. So this company does 3D printed orthodontic aligners. So it's very similar to Invisalign. So Invisalign has their company in Costa Rica and San Jose, California. So what they mainly do is that they have their design team go ahead and make designs of the orthodontic appliances in Costa Rica. And then what they do is that they have those treatments printed in Juarez, Mexico. And then those are transported across the border. So when they're transported across the border, then they're shipped out on the American side to the the clinicians, patients. To the clinicians directly, so they can give it to their patients. So most importantly, taking a look at how they're different, you can see here on the website that Smile Direct Club is direct to consumer. They do have clinicians, obviously, that work with them, and they have a similar model as Invisalign, in which the dental team designs the plan, then the dental team creates the aligners, and you get to show the rest of the world. And they're much more affordable in the sense of Invisalign comparably, I think close to a third. And the good thing is that they're printed all in Nashville, so they didn't have a problem when the border was shut down, which Align, like I said earlier, is printed in Juarez, and Align and Smile Direct Club isn't. So if we start looking at the financials for Align, back about 10 years ago, it was trading at 13 and then shot up to 398. And they really did this by using 3D printers and patents behind that. And when those 3D printers expired, they actually lost a lot of their revenue because they could no longer kind of monopolize that industry. And now they're trading around a 215. So today they were around 215. And if we take a look at their Smile Direct Club, we see Credit Suisse had given them a rating of $15. That would be the ideal blue sky. So it's like a perfect day kind of target. So anything above 1113 is something that they recommended, which is this happened right before all that time off. And here we look at David Katzman, which is the director, I believe, and then Richard Wallman. So you can see that they were buying shares over and over, and they continually buy shares during the dip time too, which lets you know, as investors and shareholder directors, why would they step in and do that if they didn't believe in their company? And so if we start looking at the actual fundamentals and the price breakdown of how Invisalign measures up with a Smile Direct Club, Smile Direct Club has, yes, a total revenues of 750 million, and then Align at 2.4 billion. So profit margin, yes, Smile Direct is a little bit below. Align is definitely cash positive, but Smile Direct Club also had a lot of lawsuits that it was involved in, and it just went to market in the NASDAQ. So if you look at that, they've doubled their revenue in a year, which is incredible, and they're taking over a quarter of the market in such a small amount of time compared to Align, who's been around for like 15 years. So they've been doing extraordinary work in such a small amount of time, and I don't think that they're to be underestimated by any means. So once they break 1 billion, it'll be at a third of where Align is, and the revenue and the profit margin is just going to come hand in hand with that. So if we do a breakdown, right, of where Smile Direct Club is now, you're able to see the lowest point, it was at 364. And today it broke $9. So obviously there's a big shift in what what they're expecting in their earnings. Obviously, Q1 isn't going to be as great as anticipated, but it's going to be a lot better than I think what people had expected during this time. And Q2 and Q3 are definitely going to be the kinds of things that are going to bring this stock to a whole different level. But as we can see, the numbers don't lie, and that's the best thing. And a lot of people don't understand orthodontic treatment. Once you're in orthodontics, it's very hard for someone to actually break out of that, just because nobody wants to end up with crooked teeth. So I see this as being something very, safe cash-wise, just because of subscription, and people are going to be wanting to continue on in their treatment, which is approximately anywhere from 6 months to a year if they're aligner candidates. So I mean, taking all those things under consideration, this is why it really is undervalued. And a quarter of where Align would be now, we're talking about close to $50, right? So it's definitely very beneath that at this time, and time will tell, but definitely this is why it has our recommendation. All right, guys, well, safe trading, and thanks again for taking a look at our video, and have a great day. Stay safe.